Welcome to another episode of the Dental Sherpa podcast.
Hey everyone, this is Caleb Carter. Thank you for being here with us. We will be sharing crucial insights to navigate your dental practice transition successfully. Gear up, clip in, and let's go.
So Bill, maybe let's just chat real quickly. And this is going to be, those are listening today. Like I said, I have a lot of people that are just starting out. Maybe they're even in dental school and they're asking themselves, when do I involve the CPA? What do I need to make sure I set up? Is there just 2 or 3 tips or tricks that you could say, hey, if you're new to dental, if you're just starting, if you're just buying your first place, think about 1 or 2 things that might make sense for them, that you feel are the most important points when trying to find a CPA and maybe any type of structure that you might say these are typical of what we see of structures of dental offices.
Starting out, I think it's important to focus on production. And many people, they want a monthly P&L. They want a lot of the micro detail things that are important to know. But if you've got good people helping you with some of those smaller details, and by good people, I mean, a strong team, an advisor like you, or an accountant, or maybe a support group of other dentists that you're with. I mean, a lot of those details are going to come from that support team. But starting out, do what you need to do and spend the money you need to spend on increasing production. That's where it starts, whether that's making sure you're in the right advertising spaces. At the end of the day, I heard this at a meeting a long time ago. I don't know what your thoughts are on this, but on a dental practice website, the number 1 clicked item on the website is the team members, not the dentist.
Well, that's a big ego hit, Bill. Bill, these people, we have to pay them sometimes upwards of 30% of our income. And they need to be clicking on the dentist.
I know that's because people assume the dentist is great. And we know that that's not, as time goes on, there's some variations there.
That's actually I've never heard that, Bill, but that's listeners.
That's what I'm saying.
Put it on your website then, right? Listeners, put it on your website.
So having a good team on there. So, starting off, investing in a good team of people. And I've seen this firsthand with a client who's had an office manager for 10 years. And one day she quits and he calls in a panic. What am I going to do? How are we going to make this? This is, she does everything. Well, within 6 months, a new person is in there and they're doing better than they've ever done before. So it's interesting, these team dynamics, how they can really affect the practice. And the new dentist, I think I'd probably hit those 2 points.
Yeah.
Do what you can do on production and take time to have a good team.
Good team.
The end product, Caleb, what I say kind of as, once you get into it a while, there's 2 things that change your life as a dentist. One is when your debt is gone. Well, that's not a good thing for a brand new dentist, that's all they have right now is debt.
Oh, yeah, a lot of it. Yeah, a lot of debt.
But I will say this to your listeners, that will pay off and it will go away. You will make it. And there'll be a time when you'll feel stressed about that, but eventually that will be done and it will be worth it. Do not let that debt get you down right now. So that's one thing. The second thing that changes your life is when you got a team around you that takes stress off your plate rather than add stress to your plate. And so working on that team from day one, I think, is an important part. Do what you can to better yourself as a leader, as a manager, to help with that. So now, outside of that, making sure you're dealing well with your insurances, making sure you have a good system set up for reporting. Make sure you understand what all the numbers are, where they're coming from. So I think from kind of a more technical aspect,
Yeah.
the dental insurance piece, when it says adjustment in Dentrix, what does that mean?
Yeah.
Well,
Where does it come from? Right.
that could mean anything.
Yeah. It could mean either we're writing this thing off. It could mean that we have insurance, adjustments, but I actually just went through that with a dentist that I work with earlier in the week this week. And it's like, what are those?
Yeah.
Well, I think it's this. And then we start diving into it and it's like, we write off these x-rays if this happens or that happens, or we write off, and it becomes a conversation, with the team members about, well, I didn't know we were writing these off. Well, we can't bill them, so we just write them off. And it's like, well, let's talk about some ways to figure out how to keep some of that revenue going. So I agree with that. Make sure you know where that's happening. Now, Bill, I want to ask you one question, because you mentioned it earlier when we talked about PPP and buying equipment. And you just mentioned it now about debt. I can't tell you, and I want to know, because I've heard a couple different points of view. I want your point of view on the idea of buying equipment to lower your tax burden. What your thoughts are on that, and why you kind of come to a conclusion there, because I feel like that's something that every dentist probably heard a lot of here in December and November from people trying to, sell them pieces of equipment, or they're looking at equipment, things that they might want, or some of these toys. Right. But I want to know what your thought is working with dentists, and what your recommendation is for these people as you talk about this difference. Because there's one thing to get the tax write-off, right? But I see in so many P&Ls, and when I go into offices, large amounts of payments that are made on those equipment for years and years after they get that tax benefit.
Okay. So my two overriding principles are, one, never buy anything just to save tax. And number
two, did you hear that? Everybody listening, did you hear that? Never buy anything just to save tax. Bill, this is like a virtual high five. Thank you.
Yeah.
Hey, Bill, sorry. I just think that's important, because I can't tell you how many times people say, my accountant says I need to buy something. And it's like, yeah, maybe you could, but dang, you really want to get into that much debt or have that anchor? So thank you. So number one, thank you. Just what's number two?
Number two is, if this is something that will help you increase production, and you've got already a mapped out way of how this is going to increase production, then you buy it. If it's helping you to maintain levels, we did a big study on CEREC machines a few years ago. And of course, there's debate. It's debatable, right?
Right.
Depending on a lot of variables. But assuming things go well, the CEREC machine will help you increase that production, offsetting lab costs 2 to 3%. And when you map that out, it's a winner. It's a good thing.
So if you can be efficient with the CEREC machine, you're saying for you, it's a winner.
That's right. If you can be efficient with it. If you're not, it's a big loser.
If you don't use it, right? If you park it in the corner, you've now spent 170 grand. I don't even know what they are now, but 170 grand. When I used to sell them, they're like 120 grand or 130 grand. You've parked it in the corner and it's doing nothing for you.
Yeah, we've got some clients that use it. They're very expensive bookshelves. They sit there, but but I would say, if you take your 5 fingers, equipment is depreciated over 5 years, and the Section 179, which every sales rep knows that code in the IRS.
They say it all the time. It rolls off real easy.
Yeah, it's like butter. Anyway, what it does is it takes the 5-year normal, spreading out the $100,000 piece of equipment over 5 years, not evenly, not 20 a year, but more of it's in the front end, like when you buy a car. So it takes the 5-year spread and it puts it all in year one. So the 100,000 becomes a write-off in year one. And then the other 4 years, there's your tax benefit right there. In terms of the equipment, you're still writing off the interest, but we know what that goes down every year.
Right.
So from a tax planning perspective, if you've had a huge year go back to my second premise. If it will help you increase production, buy it. If you're in the middle of a big year and you bought a piece of equipment, a laser or a cone beam or whatever, because you're exploding and you buy it and you produce even more, then you're going to meet with your accountant and you say, oh, hey, you've had a great year. You're going to owe another $40,000 in taxes. And you say, well, I bought this equipment. Maybe that's the time to take that whole write-off.
Yeah.
Example A. Example B, tax planning. I sold some rental property. I bought a practice. I sold a practice. Maybe we have new tax law, right? New tax rates. Our tax rates for the last 2 years have been the lowest they've been in 30 years. So taking big write-offs the last few years may not have been the best. I mean, go ahead and pay the tax. I mean, my job is, no one gets out of paying tax, Caleb.
Well, until you die, right?
But the idea is to pay it at the lowest rate possible. I know there's other stories there.
We know the sayings, Bill, right? There's only two things you can't cheat: death and taxes. We know,
right.
Bill. And we know that, fortunately for you, like your job security, you're like set, man. Like the dentist might go out of business, but guess what? People are still gonna have to pay the IRS. You're always gonna have a job, Bill.
Well, I like what I do. I'm lucky that way. But even if we go to a flat tax, I don't know, they'll find something to make it complicated. So
they will.
So buying equipment, don't buy it just for a tax write-off. And if you need it to help increase production, buy it. But definitely understand the other variables are tax planning, other situations, and tax rates.
Okay. The last question I want to talk with is how having someone that's thinking about now exiting their practice, whether that's selling it, whether, really trying to say, okay, time to retire. And I want to pose one question to you. And that is if you are going to be selling your practice, what's your thoughts on the idea of having the dentist carry a portion of that note back? There used to be conversations, and I want to know your thoughts on this about, you talk about tax rates and how low they are. There used to be some benefit years ago in some ways of someone carrying a note to help lower some of those taxable income and spread it out almost as a quasi-retirement plan. Obviously, there's some catches there, right? There's the idea of, well, there's always the possibility of a default on a note, which is low in dentistry, but also a possibility, right? But I want to know from your standpoint, that particular, and maybe any other tax things that you might say for someone looking to exit, like, would you recommend carrying any of that? Would you not, from a tax perspective? And what are some other things that they might consider doing?
So I had this conversation just 2 days ago with someone, and a lot of it revolved around, again, the tax rates. So let's say tax rates go up, which they probably will over the next few years or so. The portion that the doctor carries, where he receives that payment, let's fast forward a couple years, he's going to be, or she's going to be paying capital gains tax rate. Right now it's 15% federal. Could that tax rate get bumped up to 20 or more? So that's the one consideration that, crystal ball answer is. So this client, I said, well, if you want to, all things being equal, they should pay you the whole thing now. Get a loan in the bank, because you're going to be paying, again, tax at that lower rate. Plus, you'll have that money to go invest it somewhere else. So that's the corollary to your question is, do I, the seller, want a big chunk right now to go invest doing something else? Or do I like the idea of this payment coming in? So there's the tax portion, there's the investment portion. The one issue, Caleb, that I see that comes up more on this is when you sell a practice, hopefully you're doing an asset sale. You might be doing a stock sale. That's a different conversation. But if you do the asset sale, you have to allocate a value to each of the assets. So if you sell your practice for $1 million and you allocate 300,000 to equipment and 700,000 to goodwill, and you carry the note, so you don't get the whole million. Let's say you get 200, 20%. Right. Well, when the tax return gets done, by law, that 300,000 of equipment is all taxable in the year of the sale at the higher ordinary income rates. Whether you quote unquote got the payment or not, you have to pay tax on that. So you could be in a situation where you got 200 down, maybe a couple monthly payments, file your taxes, and you owe to 150,000 in taxes
because of that asset allocation portion of that.
Because of the asset allocation, that's it'll depend on other things, the income of the practice, right, et cetera. But that's a gross example of most of the 200 you get will go to taxes, and you'll say, well, wait a minute, what do I? Well, so it sucks the first year. But every year after that, while you're carrying it, every other payment you get is taxed at that lower capital gains rate. So it's a hard first year,
right?
But the other 9 years or whatever are easier. So I think if you're carrying the note, it'd be nice for the bank to finance the whole thing. If for some reason the bank,
because taxes, they're not saving anything. Is that what you're saying? By carrying the note, they're saving zero taxes, or are they because of their income, their personal income that would be recorded for that year?
By carrying the note, they may not be saving any taxes unless, it could be costing them if tax rates go up.
Got you.
So, but if the bank won't finance the whole thing, I'm always sort of a clean cut guy. I like if I'm selling,
I can tell by your hair.
Yeah.
You take care. You're a clean cut guy. I can tell.
Not what I'm talking about, but you cut it off. You sell it to this guy, get paid your money, transfer it over, go.
Don't worry about it anymore.
Be done with it. If you're selling it for a reason. Now, if this is your son or your daughter, a family member, that might be a little different. And I've got some clients that have done that and it's worked out great. The dad or mom has carried the note for the son or daughter, and it's worked out well. But if you don't really know this buyer and you're ready to sell your practice and go do other things with your life, I'm going to say do everything you can to get paid the full amount and leave. Good.
That's good advice, Bill. Bill, we've been jamming for an hour. I know it didn't seem like it. I know you were like, holy cow, that was so entertaining that that hour flew right by. But I want to just give you your last parting words. What would you want to say to anybody listening here? Little tidbit of advice or anything else that you're like, hey, this is what, if you're listening to Bill today, this is what Bill wants you to know.
I appreciate you taking the time to listen. And I think having a good long-term perspective is to being a business owner is key. I think there has to be a nice mix between looking at short-term numbers and long-term numbers, meaning don't always get caught up in a monthly P&L because things change. You produce 1 month, you collect 1 month, you spend, then pay the bills the next month. In our firm, we look at a quarterly P&L statement because it takes out some of that ebb and flow. And it enables you to, it's long enough to give you a picture, it's short enough to give you time to react. So as you look at the numbers in your practice, try not to get too focused on the minutia, but remember you're trying to get enough data to use that to make decisions about, am I paying, how am I doing compared to other offices paying my people or my lab or supplies? How am I doing this year compared to last year? To your question, Caleb, am I setting myself up in if I'm near the end of my career, is everything looking good and clean and presentable to present this to a buyer so that, it's understandable and everything's explainable. I think in terms of your relationship with your accountant, your CPA, just try to keep those lines of communication open. I know we've been overwhelmed this year, but it's also been one of the most exciting years because of all this new information, and it's been fun to correlate all that and put that into usable stuff. Make sure that you're getting real world usable stuff that can help you in your practice. I think, and then I think the last thing is it's been impressive to me and helped me in my business as I've watched some of my clients really respond well to this. And it's made me grateful for my job and the opportunity to work with good people who get it, who understand kind of the relationship between the team member, the owner, all this government money that's coming in. That's been the hot topic this year, and keeping the focus on the patients, because without the patients, none of this really happens. So
Yeah,
it's been a great learning year for us, for sure.
I think it has for a lot of us in the industry. And I just, if anything that I saw through this is I saw dental became more human, if that makes any more sense. It was like, it used to be, we were talking about things like, how's our metrics, how are we tracking with our overhead? How are we doing with our hygiene to production ratio? How are we doing with our case acceptance? And then when this all happened, people just kind of like snapped out of it and were like, wow, we are people, and we still focused on the metrics, but it became a little bit more personal. And I felt that a lot too. I felt like my relationship deepened with everybody that we helped. And my relationship deepened with a lot of people that weren't even clients, because there was just free information and data that was shared. And I loved that. Bill, thank you. Thank you for your time. Can you just real quickly tell people how to find you if they're looking for a CPA and they like what you heard today? How can they find you?
Our website is obcpas.com. The OB is the Owens Bondell name. My number is 602-995-0081. And my email is wlowens@obcpas.com. I think if you Google, though, Owens and Bondell CPAs Dental, our website will come up. That might be the easiest.
It worked for me.
Way to get a hold. So.
Well, Bill, thank you so much for sharing your time at this busy time of year for you. I appreciate your insight. I appreciate you willing to take some time to be with our listeners. And anybody that listened to this today, please reach out to Bill if you've got questions. He's actually helping me currently with one of my clients in a situation that we had. So I trust him, and please reach out. And if you've got any questions, don't hesitate to call me. And I'm sure Bill would be willing to, if you're looking for a CPA and have some specific questions, he'd probably be able to reach out and get a hold of him, and he'd probably be able to help you too. But thanks again for listening, everybody. We appreciate you, Bill. And as always, keep your head up, keep moving forward, and we'll connect on our next episode of the Dental Sherpa podcast.
Thanks, Caleb.